Well, that's right. As we enter a whole new day in trade, let's take a look at the forces that are likely to impact our markets today, whether they be the global cues from USA or how Asia is performing this morning. Now, in the USA, Stoxx finished higher on Friday to close out a very strong week at record highs. The Dow added a meager 0.1% but closed at a new all-time high, and the S&P and Nasdaq also went up 0.5% each to close near to their record highs. Now, Dow Futures this morning are up 103 points, so that's very encouraging for us. S&P and Nasdaq Futures also indicate that the tech rally is here to continue. So, Nasdaq Futures are up 0.36%, S&P Futures are up 0.33%. So, US market action last week looking good, futures this morning looking encouraging, should be creating a positive sentiment for global equities. Now, if you look at Asia, markets in China, Hong Kong, Taiwan are still closed for Monday trade. However, wherever it is open, like South Korean Kospi, that's up 1.35% at early trade. The Nikkei rose 1.09% early trade in Japan and crossed 30,000 for the first time since 1990. So just gives you a feel for where we are in terms of Japanese equity markets. The Topix also gained 0.82% in early trade, did very well. Then, particularly in Japan, the government has just released data which indicates that Japan's economy should grow at around 12.7% on an annualized basis between October and December. So those are really healthy figures, and that's what's got that whole market quite invigorated this morning. Then European stocks closed higher on Friday. Stoxx 600 closed the session up around 0.6%. Media shares climbed 1.5% and technology shares climbed 1.3%. Most of your sectors and major bourses finished the day in positive territory, and for the week the Stoxx 600 was up a whole percent. Now, two commodities we need to check on. A lot happening with metals and oil. Oil has, of course, continued its rally post that one-day break which we saw on Friday. So it had gained for 8 days straight. It then took a bit of a breather last Friday. It seems that is now all behind us as prices edged higher on the back of a possible stimulus bill coming up soon, as well as the production cuts by the OPEC continuing and demand reviving. But let's recall that due to the COVID surge that we've seen lately, demand outlook from OPEC and IEA, which is the International Energy Agency, has been a bit bleak. Brent crude futures, however, still advanced 2.11% to above 63, so 63.5, which is a major hurdle cross for them in recent times. And then US oil was 2.11% higher at $59.47 per barrel. Gold prices eased on Friday as the dollar steadied. So spot gold was 0.2% lower at 1822 and gold futures were at 1823. So those are global cues as we kick off this new weekend trade. For now, seems like no major catalyst or market cap eroder for equities here for us. SGX indicates a pretty much flat to positive start.